Hello, everyone, and welcome to the Santa Clara County Real Estate Market Analysis for February of 2023. This is the time when we kind of sit back, survey the lay of the land, take a look at the numbers for the county, and see what big trends that we are seeing, which direction they're moving. Are we moving towards buyers or sellers? How's inventory doing? All those kinds of things to give us an idea of where we are. We also compare ourselves to 1 year ago compared to the same month, and then we also look back month over month to see if we can figure out any trends with the hope of potentially figuring out where the market might be going in the coming months. So let's go ahead and jump right in. As we always do, we're going to go ahead and start with total active listings. Now, before we get into the numbers, let me also remind everyone that you can visit me at soldbyrobert.com. I have all my tools for buyers and sellers to check out there, whether you want to get an instant market analysis on your home value, literally instant. You enter your address and it pops right up. Which is obviously is not going to be as exact as a comparative market analysis, which I can do for you. Simply reach out to me via the website to start that off if you'd like. Or if you're looking to start the search for your perfect next home or first home, the tools are all right there for you to get started. Also, keep in mind, if you are searching for a home, I have some awesome tools that I use with my buyers that allow a little bit more interactivity for us to actually comment about specific homes that you've found. So if you are really serious about finding a home, I have to set that search up for you directly. So just reach out to me if you'd like to set that up. It's a great tool. It really helps us categorize homes by how interested you are in them and have a chat back and forth about specific homes. So new tool I'm offering to my buyers that I think is going to be great for making the process even easier. All right. So let's go ahead and jump in. Total active listings. This is the inventory number. This is how many homes were available in the month of February. And we're going to look at this from the perspective of what was a year ago compared to now. And then we're also looking at this chart at months back. And that's being achieved by one slide by having the February of 2022 number right next to the February of 2023 number on the right, as you can see over here. Now, we also, of course, have February over here so that it's in context with the timeline of the year, but I like to keep those two right next to each other so you can easily visually see the difference between February of this year and February of last year. So just keep that in mind. That trend holds as we move through the rest of these slides. All right, so we are up 10%. Inventory is up to 970 homes in Santa Clara County. That is compared to last year's number of 884. So definitely an increase. If we try to suss out where things are likely going to go from here, let's take a look at what happened between January and February of last year. You can see that between January and February in 2022, we actually saw an increase in inventory, whereas this year we saw a decrease. So that's a little bit of a deviation, clearly, from what we have seen historically. And I think a lot of this is being fed by the concerns of sellers. One of the big things that my sellers are telling me, and I've talked about this in other videos, but I think I might be the first time I'm touching on this one, is interest rates being where they are. Sellers don't want to get into a situation because they have a great interest rate right now. Most sellers have a very advantageous interest rate right now. So by moving, they would have to trade their 3% mortgage for a 6% mortgage. And that is not what a lot of sellers are wanting to do. So they're just not seeing that as a beneficial move for them right now in terms of being able to get the most lucrative loan possible. And that's definitely, I think, reflected here. We will see how the rest of the numbers are influenced here. But if we take a look at what happened between February and March of last year, we can see numbers went up. And March is a magical month. March is a month when we tend to see things happen in terms of the market starting to heat up. More homes tend to get listed. More homes tend to get sold. And we'll see how that goes when we review the March numbers. But for right now, my expectation is that we will see that uptick in March. We will see the total number of active listings go up. And we'll be looking at a number here in a minute, the pending sales numbers, to kind of give us a little insight into what we might expect in the month of March. Month of inventory is also noted here, 1.8 months of inventory. Now, nationally, the healthy number is considered 5 to 7 months. That's considered a balanced marketplace. Below that is considered a seller's market, and above that is considered a buyer's market. So you can see that we are, in terms of inventory, very much into seller's market territory. But the other side of the equation here in this market in Santa Clara County completely undoes that. and shows that we are currently in a buyer's market. Now, the reason why I'm more recently focusing on months of inventory is this number is so low. I think that anything that increases buyer activity would instantly put us in a seller's market, simply because if interest rates drop to a certain level, or some other thing happens, and if we consider interest rates the linchpin subject, it would do two things. It would encourage buyers to buy, and it would encourage sellers to sell, because they would also see that for buying their next home, they will get a more beneficial interest rate. So it's an indicator of how quickly this market could turn, and that's why I wanted to point it out this month. All right, next, let's take a look at the new listings. These are the number of homes that were added to the marketplace, homeowners who decided to list their homes in the month of February. We can see this number is down 37% from last year. Last year, 1,555 folks added their homes to the marketplace in February. Now remember, March last year is when interest rates started to take their rise, which really cooled the market off. So we are still looking at numbers that reflect a hot market. And you can see that obviously sellers more interested in putting their homes on the market and potentially taking advantage of interest rates, or not taking advantage of interest rates, but taking advantage of the higher prices that were being paid. And sellers were not intimidated by interest rates that they considered negative, that they might not want to sell their home because they'd have to buy another one. This year, February of 2023, we have 979 homes added to the marketplace. If we take a look at past months, the trend here isn't too hard to spot. We obviously peak in March, April, May of last year. I think we'll see the same peaks, just at lower points. And if we use this as a guideline to anticipate where we're going to go in the following month, you can see that between February and March of last year, we had a pretty substantial increase in the total number of homes that were listed. I think we'll see that increase. I just don't think it'll be as substantial as it was last year in terms of the month-to-month relation between February and March was last year. I think it'll be an increase, but not the dramatic increase, because that's an 800 home increase between February and March of last year, and I don't think we will see that this year. We'll see something on a much smaller scale happening. All right, next. Now, this is my attempt to help us compare homes sold numbers with pending home numbers. And just to in your head categorize these, think of homes sold as homes that actually closed escrow in the month of February. So those are homes where the escrow closed, the seller got their money, the buyer got their house, and everything was concluded. The pending number is the number of homes that went off the market because they accepted an offer, meaning that the escrow for a pending home will likely close 30 to 45 days after that offer is accepted. So the pending number is a way for us to look at that number and say, we should expect an increase next month in homes sold based on that pending number. And we can see in some cases that that's just not happening. For instance, between January of 2022 and February of 22, well, it absolutely happened, right? We had 889 homes go into pending, and then the following month we had 662 homes sold, which was an increase from January, and December saw an increase into January of 2022. But interestingly enough, in March, you saw 1,780 homes go pending, but the next month you saw it actually go down. Well, an awful lot of folks didn't end up closing escrow that month. And we all know why. Financing fell through, took too long to get something done. They couldn't lock in a rate. Whatever the reason, we had a big hit on financing. So a lot of escrows simply did not make it to the finishing line. And that's one reason why I wanted to start sharing these two numbers together, because I think they're an excellent way to look at these numbers and kind of understand, A, what happened, and B, what might we expect in the upcoming month, right? So January of 2023, we had 295 homes sell. In February of 2023, we had 412. It was a 40% drop in terms of the total number of homes sold. And you can see that in February of 2022, we had 662 homes sold. I didn't put February's from 22 and 23 next to each other on this particular slide because things were already getting kind of crowded, and I wanted to make sure to give you this data as clearly as possible. In terms of pending homes, down 36% from the same time last year. And take a look at what we've seen here. So we had an uptick in pending. We had an uptick between December and January, and which was reflected, I think, by the numbers of pending. But look at the big jump we have in pending in February. We have 820 pending homes. in February, which to me indicates the increase I was suggesting in homes sold in March. Now we'll see if that works out. There's been no crazy fluctuations in interest rates, so we wouldn't expect as many homes to fail closing escrow. But we're going to keep an eye on that when we do the March numbers. We'll see where we're at. But my estimation that we should see an increase in homes sold in March, I think, is gonna hold water here. Last year, between February and March, we saw the biggest jump of the year. Right, March was the highest homes sold number of last year. Again, primarily reflected by the fact that we had interest rates go crazy in March, so things got depressed from there on. We bottomed out at 255 homes sold in December of 2022. But again, reading the crystal ball, next month we should see an increase in the total number of homes sold. All right, Santa Clara County, average original list price. Now, as I've mentioned in past presentations, this is original list price, meaning it is the data from the day the home went on the market. So this is looking inside of a seller's head. What were their expectations? Where did they anticipate their home would sell? What did they think was the right price to list their home at? And that's what this number represents. It doesn't represent what it sold for. It represents the expectations of sellers. And according to this, it was up 24% from the same time last year. Now, I'm going to go ahead. These are numbers as they would normally be presented by most other real estate folks, but I'm going to go ahead and let you know this 2,123,000 is not a real number. The real number is about 1,780,000 or 770. The reason being there was one home that had a crazy zero added to it when it was originally listed and immediately got its price reduced. And I wanted to include it here just to indicate how you need to really look deeper into some numbers. We're going to look into some things here in a minute in terms of when we look at reduced price homes, because one of those, obviously that would show up as a reduced price home, and I've accounted for that in that data. But I wanted to show that to you. So the real number here is really about 2% increase, which is actually fairly good for the county on average. But again, I wanted to point out that the variations you can see just by one home having a mistake made by an agent. And I left this one in here because I wanted to point that out, because almost every single month we get one of these where there is an agent who has made a profound error, and it doesn't get corrected for, usually by data that gets shared around out there. So I wanted to point that out and correct it here live with you so that you could understand what causes those problems. Okay, in terms of trends, what do we see? Obvious trend here, we saw sort of a peak between May of 22 and August of 22 with a steady decline that sort of saw a little bit of uptick in January with really flat behavior between January and February. If we look at February to March last year, we saw a little bit of an uptick, and I would expect the same kind of uptick, relatively small. It was a 20K uptick last year. I would expect something on par with that or less. So I'm really looking more towards a flat month in March compared to February, rather than some giant increase or jump. I don't see any market influences that would push it up high, unless magically some huge demand jumps out in terms of buyers out there buying homes and causing multiple offers to happen. Okay. Santa Clara County average sales price. Now, these are just the sales prices. This is what they actually sold for. So there's no weird data entry potential problems with this data, but we can see that it's down 10.2% from the same time last year. So keep that in your head. Seller expectations were about 2 or 3% higher than the same time last year, but actual average sales performance was down over 10.2%. That's a pretty big difference, right? So that's about a 12.2% difference. So in Santa Clara County overall, and in some communities, it's much worse in some smaller cities. There really needs to be a calibration to what the market will sustain in terms of prices at which homes will sell, because the longer these homes stay on the market, the less they're going to make. So the earlier you make the right pricing decision, the more money you're going to make in the long run. In terms of comparing it to the same time last year we saw 1,722,000 as the average sales price. This year, 1,546,000. And the trend here, again, is not tough to spot. We've pretty much seen a relatively steady decline since March and April of last year. And of course, that's simply the lower demand that has pushed that. We've got inventory that's staying on the market longer. Days on market is increasing. Sellers are having to get the attention of buyers, and they're having to do it by lowering their price. And we really saw things sort of take a bottom here in December. very normal for the summer, for the winter months to be when you're getting the lowest average sales price. Things tend to really decline during the winter, but boy, did things jump back up in January. And then we saw a little bit of a decline back again in February. So the trend is still down. I wouldn't expect to see sales prices increase dramatically. However, we have seen some numbers recently. They indicate that sellers are tending to get their asking price again. So this may actually go up a little bit next month. If we compare February to March of last year, definitely an uptick. I don't think we'll see that big of an uptick, but again, something on a much smaller scale, but a little higher than we're seeing here in February can be expected in March. Percent of list price, and this is what I was talking about a moment ago. We saw 111.37% of list price in February of 2022. So basically sellers getting 11.37% above asking price. And for a while now, we've pretty much had either getting at asking price or below since about August of 2022. But this month, in February of 2023, that's at 100.9. So almost 1% above asking price, which implies there are some markets out there, there are some areas where folks are getting multiple offers. And enough of that is happening that the average ends up being over 100%. So with that kind of activity happening in February, my expectation would be that this would uptick in March, because if we look at February to March last year, a pretty big 2%, more than 2% uptick between February and March of 2022. I would expect us to see a similar uptick, but not on that scale, maybe going to 101 or 102, somewhere in that timeline, since activity tends to increase in March as it does every year, but just not as dramatically as last year. So we'll see how that goes when the March numbers are available. Next, days on market. Again, not a hard trend to spot. We can see that since April of last year, the days on market has been increasing. When compared to the same time last year, February of 2022 saw 15 days to get a home sold, which is a great number. And it's not even a real number. It is a artificially high number because real estate agents in their listings would simply put, we're not going to look at any offers until such and such a date. And that was typically 2 weeks after the home was listed. So if folks had simply said, present your offers, and we'll take the good one, the first good one we get, probably would have sold in less than a week, just because that was sort of the crazy frenzy of buying that was happening at around that time. This year, February of 2023, that number's jumped to 33 days. That gives us a 120% increase in the same time last year. If we look between February and March of last year to get some insights into what we could see this year, my guess would be we do see a drop in days in market again. We saw a drop between January and February. The same thing happened between January and February of last year. So I would expect this to drop again. It only dropped by 2 days between January and February, where it dropped quite a few more in January, February of last year. And then it dropped by 3 between February and March. I would guess we may lose another day or two, maybe creeping up to 3 days dropping from this. So my guess would be we're still going to be at a month or more with days on market in March of 2023. Next, let's talk about price reductions. So we're going to get into a little bit more deeply. And this is the point in the show or the presentation where I'd love to hear back from you. I've had some folks suggest that doing the more deep dive into price reductions deserves its own video. If you agree, fantastic. I'm happy to do that. I'm going to go ahead and do the longer version here for Santa Clara County right now. But if you would prefer to see this in a separate video, if you have no interest in this, but you like the other data and you would prefer to just not even have the two things connected to each other, feel free to let me know. I'm happy to do that as a separate video, just so that you're not having to deal with stuff that you don't want to see. 19.2% of the homes on the market in February of 2023 had a price reduction. In January of 2023, that number was at 23.4. So it's a pretty good drop from last month. I think given the way where we are in the market and how things have been going with pricing, I think this is a fairly reasonable number and not to be surprised by. As things get more competitive, as we see the market heating up a little bit, but also as we see homes coming on the market more reasonably priced, fewer homes will have to adjust their price down the road. So that's represented by this, which is a decline from the price reductions we saw last month. Now, let's go ahead and take a look a little bit more deeply at these numbers relating to the reductions, the price reductions. So this is the rundown. These are all homes that have price reduction. This is a reviewed list, so there are no weird ones in here. There are no homes that represent homes that were listed incorrectly and then had their list price dropped. It's curated by me, and I make sure that all the data in here is good. Given that, the average price reduction in Santa Clara County was $172,827, which is not a small number. We can see here in a minute some of the areas that really skew that one way or another. The median was $100,000, meaning that half of the price reductions were above $100,000 and half of the price reductions were below that amount. The highest price reduction was $3,112,000. And of course, I went searching for the crazy entry that caused that, but sure enough, that's a legit one. And the lowest price reduction was $1, which I am not real sure what the logic there was. We can talk about it. I guess the logic was we were priced at something like 1.8 million and we wanted to be below it. However, if you do a search for 1.8 million or lower, you find $1.8 million homes. So no one is searching for $1,799,000 homes. So those agents who adjust their thing by $1 to be under 1.8 million or whatever, I guess there's a psychological point they're trying to make. But in terms of what homes will show up in buyer searches, it's really not going to affect it. Okay, so let's go ahead now and also draw that connection between homes that have had a price reduction and days on market, because it's a shocking connection. And it's really a sad one because it really represents so much lost money to some of these sellers. And you can see in some of these communities, there have been dramatic days on market. We've got 165 days in Los Altos Hills, the average in Los Altos Hills, the average in Portola Valley, 124, the average in Stanford, 241, the average in San Martin, 114 days, the average in Milpitas, 118 days, in San Jose even, and the average is 72 days with a sample size of 163, which is the largest sample size of all of these. San Jose represents the lion's share of homes with price reductions just because San Jose is so huge. But we can see that 73 is the average days on market. And what's sad is these are changes that should have been recognized and made far sooner, right? You shouldn't get to 73 days on average before these things get remedied by a price reduction. The median is 54.5, so half of these the homes were reduced in price, were above 54.5 days, and half were below 54.5. And the highest on this list, 553 days. And any home that's been on the market that long, think back what the market was like 553 days ago. Do you honestly believe that that home is going to have any hope of selling for what it would have sold for 2 years ago, 3 years ago? I mean, that's 553 days ago. So very disappointing to see that kind of stuff. If we want to look into some of the details here, we can see that there are an awful lot of price reductions here relating to these properties. I've got it sort of sorted by the highest. Let's go ahead and go down. So here's 1.5 million. The disappointing thing here is that hasn't sold, but it's been on the market for 251 days. There are some here that have since at least had an offer accepted. This one dropped its price $750,000 and is now set to close at the end of April. This one has closed. It ended up in March 21st. These both closed. One dropped $400,000. The other one dropped just for some reason $99 or $98 below $400,000 and finally got sold. But also keep in mind, look at this, 70 days, 98 days. These are actions that should have been taken much earlier, and you wouldn't have had to have reduced your price as much in those scenarios. But it's good to see a lot of these are actually getting sold. Here's the one that's a $3 million price drop from 3.195 million, or excuse me, 197,000, which brought it down to 2.998. And note that it sold for over asking price once it was reduced to a more competitive price. And the good news is, I guess good news, that was a 34-day change and it happened relatively quickly. It was set to close on April 6th. In terms of, let's see here, that was 1.5 million. So a lot of good stories here, right? 150,000 ends up selling for just under asking price at the final asking price. Just in every case here, 149,000 they ended up getting sold. 125,000 dropped from 1.425 to 1.3, ended up in a sale, closed on the 14th of February. Or excuse me, it's going to close on the 13th of March, 14th of March. 102 days. Absolutely should have happened earlier. So why am I getting into the details of all these? And we can look at some of these in terms of we can sort ascending on these days on market to get a better feel for this. When you've been on the market for this long, I mean, look these conversations need to happen so much sooner. And look at this one, 324 days on the market. 296, clearly not priced appropriately, needs to have that change. Palo Alto, we've got, let's see here, 235 days for this property. It's good that it has finally seen a price reduction, but clearly not enough of a price reduction to get it sold. Where was the one that, I think Los Altos Hills had the crazy one. Nope, that's 165. Was it Stanford? Yes. Stanford was where the 553-day home is. And it was originally $4.193 million, dropped $1.893 million to $2.3. Now imagine, remember, this happened in February. Imagine if that change had been made 540 days ago. It would have immediately sold for over asking price. But the right call wasn't made. Things didn't happen, and unfortunately, the home ended up staying on the market for far too long. So why am I making this big point? This is really going out to all of my folks out there who are working with their agents, to all the folks who listen who are agents. Please have these conversations with your clients or with your agents, depending on who you are in the equation. Every single day that passes, you are losing money. If you pick the right price today, you can be sold in a week and you can move on and get the maximum out. If you don't make this move until a month from now, the odds are you will have to sell for less than you will sell for today. There is no sign that prices are going to dramatically increase. Obviously, we're heading into a market where things tend to get a little hotter, so this is a good opportunity. There will theoretically be more buyers in the marketplace, so by being more competitive on the price basis, maybe you'll get more attention and get yourself sold. So make those decisions now. All the indicators are we're heading into recession. That is not good for home prices. So things are likely to get worse, not better. Make sure you're making good decisions. Get going, have those conversations. And I know agents, for whatever reasons, really hate having these conversations, particularly if they really built up their ability to get price X, Y, or Z. But you have to be, in order to do the best thing for your clients, you have to have these conversations with them. All right, folks. That about covers it, I think. Again, if you'd like to reach out to me, you can find me at soldbyrobert.com. If you're interested in buying, selling, or investing in real estate in Silicon Valley, I would love to be at least considered as one of the agents that you're interviewing for the job. I'd love to share with you how I can perform better than just about anybody else you might be wanting to work with. So again, soldbyrobert.com. Feel free to reach out. As always, the goal here is to leave you with more information on the table than I take up in your time. I absolutely hope we've achieved that today. Thanks again for listening. I'll talk to y'all next time.